Throughout this cycle, I have been a fierce advocate for the stimulus checks, particularly with the rescue plan. And that came from research. The paper you cited, this is peer reviewed, well cited, looking at does it matter how we get money to people? Stimulus checks, or like what Obama did, little dribs and drabs and tax credits, both make sense. But when we really want to get it cranking, give people money, give it in a good slug, let them get spending lists, get the jobs back. And for a lot of reasons, in a lot of ways, we did big fiscal. Those stimulus checks, they mattered. And we are enjoying a recovery that, frankly, even I, as the real optimist on big fiscal, I'm like, wow, this is good.
Yeah, we saw a GDP print that just kind of came in a week or so ago, well above expectations at 3.3% here. If I'm the Fed, there's an argument to be made that inflation is tamed, economy's doing okay. I see in one of your recent notes, you say the Fed is afraid. What do you mean by that?
Well, the Fed's always afraid. They don't want to make a mistake. We're kind of hard on them if they do. No, to me, and the argument's been made, Chris Waller, Bostic, that, we have the luxury of time. The economy is really strong. We can wait and see what happens with inflation. And Frank, I absolutely firmly disagree. They do not have the luxury of time. They have a dual mandate. And once we are headed towards it, and we definitely are headed towards 2%, they need to start cutting. I'm not looking for 200 basis points on Wednesday. It's just like, let's get going. So you can do this gradually and carefully. And yet the demons of the 1970s with Arthur Burns cutting, then inflation got out of control, and it was an election year. It's like, oh, wow, here we are. So I expect them to really drag their feet, and we better get real lucky that financial markets hold it together until the Fed starts,
Exactly.
There's your stock report. That's your stock report for the day.
We better hope we get lucky.
Market strategist Claudia Sahm.
Yeah, sorry.
We got to get really lucky here.
So, Claudia, I'm looking at the WIRP function here, kind of the world interest rate probability. Still looking for 5 or 6 cuts this year. How do you view that?
I hope they're right. There's a lot of daylight between what I think the Fed should do, and that's they should start cutting right away, and what I think the Fed will likely do, and that's starting at the earliest in May. And obviously when you start is going to make a big difference on how many cuts you do for the year. So I think what's most likely is something closer to 4 cuts, take a percentage point off. And yet, markets have pushed the Fed around before in this cycle, so it just might get it.
The Bloomberg Financial Conditions Index, folks, the word is, I'm using this judiciously, massively accommodative to show where they are. Claudia, on the debt and the deficit issue, and it's an angst of all of our listeners on CarPlay, Apple CarPlay, and all of you watching on YouTube, Bloomberg Podcast. Claudia Sahm, it's just as simple as this. Joe Stiglitz says you can do all this fancy debt and deficit, but you got to have an underlying growth rate to solve it over time. Do you have a confidence with the new boom that we have an embedded underlying growth rate that can extract us from this debt crisis?
I wrote a piece recently for Bloomberg Opinion about this question of the deficit, the debt. Should we be worried? I come down in the place of no, we should not be on a lot of we're in a good place financing the debt. Things are, and as you said, we're in a good growth position. I don't ever want to say we're going to grow our way out of the debt. I think that's too optimistic. And yet what I say is step back, look at the context. What are we doing with all of this government tax and spend policy? And that's the conversation we should have is bottom up, not get obsessing over some top line number. And yet I will absolutely affirm Stiglitz that this growth piece is so important. And these productivity numbers we've gotten, which, productivity can disappear on us, but if we even get a 0.25 percentage point on trend productivity growth, all sins are forgiven for any mistake made in this cycle. So that's so important.
That is the economic insight today, Paul, how Dr. Sahm there went to such a narrow incremental growth. People think you got to have a ginormous growth. Even just a little bit of a growth gets it done over 10 years.
Claudia, the conversation when we had the Fed pivot late last year seemed to really migrate from, is there a recession in the scenario to, I guess the consensus was, very much a soft landing. Is that where you are? Are you think that this Fed is just about done its job here in negotiating a soft landing?
I've been calling a soft landing this entire time.
Yep.
That inflation was in fact dare I say the word transitory. We don't need to argue about that one today. But inflation went up. There was a lot of COVID disruptions. Then Putin showed up. He caused a lot of disruptions. And we got many things under control, and inflation has come down. I don't give the Fed a whole bunch of credit for that. They're in the mix, and they needed to be in terms of, going after the inflation that surged in 2022. And yet everything, I am still a purist. It is until we get inflation 12 months on 2%. I'm not calling the soft landing here, but wow, we can see the runway, right? Like this is just, we're so close. And this was not supposed to happen. And it happened.
How ex post is the Fed right now? Ex post, folks, is after the fact. Ex ante is it's what the media wants. The financial media wants them to get out front. Yeah, right. There's no history that they do that. But I mean, what's the level of ex post here? Is it like, Claudia, is it like Richard Timberlake in the Georgia school, which is they're going to wait and wait and wait and wait? You mentioned Arthur Burns earlier and the political soup he had to live in. What's their level of ex post right now?
They're going to wait as long as humanly possible. And that actually might hit them pretty soon. I mean, the 3-month changes in inflation, the 6 month, I mean, they're at 2. Of course. So like they really got to get going.